EO Nashville, and I am very excited, and we are all very excited to ring in 2021 and see how incredible it's going to be. We're kicking off the new year with something new. It's a new series called EO Exchange. And it's designed to let us make connections online while learning on timely new topics. And I think this topic is very timely. I want to encourage everybody or remind everybody that in the last 15 minutes this morning, so as not to miss out on the connections portion of this event. So we're going to have some breakout rooms in a live event, and you'll be placed in some small groups with some thoughtful prompts, and I'll give you those prompts at the just before going into the rooms to kind of get the conversation going and really have some sharing and some connection, albeit virtually. And as I say, we're going to have the presentation, and we'll also have a bit of time for Q&A. So put your questions in the chat. I'll mention it now, and I'll mention it again. If you have a question that we don't have time to answer, we're going to email those to Marla, and she'll put her email address in the chat. And once again, we will share that as we move forward. So let's get things going here. We're going to talk about all things PPP, and we've got several experts with us and our strategic alliance partners, Lane Rhodes, Kevin Roddy, and Sasan Zamani. And let me just hit those folks tell you a little bit about those folks really quick. So Sasan Zamani is the office managing partner at Fraser and Dieter. As a leader in their tax group, Sasan specializes in providing income tax planning and transaction advisory services to his clients, as well as members of the firm's healthcare industry and technology industry groups. A graduate of Auburn University, he received his Master's of Taxation at Georgia State University. So welcome, Sasan. Next, we have Lane Rhodes. She is the Senior Vice President of SBA Lending for Pinnacle Financial Partners, is known as the go-to expert for SBA lending across our state and throughout the Southeast. With more than 20 years of experience, she specializes in business acquisitions and mergers, partner buyouts, commercial real estate transactions, and feature in local media for her expertise on the Paycheck Protection Program. Kevin Rodney, a lot of us already know Kevin very well. He's the VP at Pinnacle and currently serves in our community on the board of the Entrepreneur Center as treasurer and the board of Family and Children's Services. In addition to past service on numerous boards, Kevin was a past board chair of both Friends of Warner Park and Big Brothers and Big Sisters of Middle Tennessee. Kevin's a graduate of W&L with an MBA from Owen School University or Vanderbilt University. And so, hey, I just want to thank all of those experts for joining us. Thank everybody from EO for joining us. And I'm going to turn it over to our experts and let them talk about PPP.
Okay. Well, I'll go ahead and get started. Welcome, everybody, and Happy New Year. I really appreciate the opportunity to be here. Hope everybody's year is getting off to a fairly good start, despite what's happening outside of our bubble here in Nashville. But with that said, what we wanted to talk today about, I think it was initially teed up as a discussion about PPP forgiveness and some tax implications that comes along with PPP and SBA in general and the CARES Act. I think we made an executive decision to tweak it a little bit to talk about some other things that we think are more interesting and perhaps more relevant, that being some of the enhancements as it relates to SBA lending and loans that the CARES Act, the recent CARES Act has brought and will be available to you. PPP2, or a second round of PPP or new money loans, will be available here in the next week or so. That will totally torpedo my dry January attempts. But no matter, that will be available to some of you. And I wanted to give a brief overview of the preliminary guidelines for that PPP2. And then I'm going to turn it over to Sasan at Fraser Dieter, who is going to talk about some tax implications here at the beginning of the year. So let me reintroduce my friend and partner and quote SBA guru, which really shouldn't be in quotes. She truly is. She does more SBA loans than anybody in the state. Lane Rhodes, who's going to talk about the CARES Act and SBA loans. So Lane.
Thanks, Kevin. Good to see everyone this morning. Yes, we were going to talk about PPP forgiveness, which is still actively going on for now, what we're calling first draw PPP. So that is still live and in effect right now. And the Consolidated Appropriations Act that did pass right at the end of the year and was signed into law on the 28th of December did have some nice benefits for forgiveness. So I thought since we were supposed to address that, I'd at least let you guys know about a few of the benefits for forgiveness under that Consolidation Act. And that did include a streamlined forgiveness application for PPP loans that were 150 or less. So that was something that we had been looking for and lobbying really hard for. We had actually hoped that they would do streamlined forgiveness for 250 and less, but we at least got it bumped up to 150 or less. So there's really no reason at this point to kind of wait if you have a loan that's 150 or less to go ahead and kind of start pushing forward with forgiveness. That Consolidation Act, of course, put into effect PPP second draw, which, like Kevin said, we hope will go live in about a week or so. The SBA just yesterday released their first interim final ruling on PPP second round. So we're still kind of reading through all the details. They'll hopefully release the application and go live with the online portal through SBA so that banks can start processing that. But as of right now, that portal is not active. But PPP round 2 is definitely targeted at smaller, harder hit businesses. So, we saw a real quick mad rush to get funds for the very first round of PPP. I think there probably will be some sense of urgency for this round 2. However, I do feel that because it's going to limit companies to 300 employees or less, and 2 million is the max that you can apply for, and you do have to show that your business had a reduction in revenues of at least 25% from one quarter in 2020 compared to one quarter in 2019. So due to those qualifications, I don't think we're going to see quite as many companies qualify, so that hopefully that money will not run out. So there is $275 billion that's been allocated in this bill for this PPP second round, but it really truly is targeted at companies that can show that they had some financial impact. That 25% reduction in revenue has to be shown in order to qualify for it. Since I am the SBA guru over here at Pinnacle, I definitely wanted to mention a couple of other goodies to the SBA program that were part of that Consolidated Appropriations Act, and that was some enhancements to the other SBA lending programs out there. So in addition to PPP, they gave some benefits to help spur economic growth for small business owners through the other SBA lending programs. Their SBA flagship program, the 7A program, they're waiving all fees for this calendar year for SBA, which ends at the end of September of this year. So through the end of September, all the guarantee fees on that flagship program will be paid for by the government. So there's essentially no fees from the government to do a new SBA loan in 2021. They've also set aside more money to make potentially up to 6 months of payments on new SBA loans closed before the end of September. Now that money can run out, so they're not guaranteeing 6 months of payments for you, and they have capped those monthly payments at $9,000 per month, but that was a really nice benefit as well. So if you're looking to expand your business or potentially looking to expand by buying another company, it's a good time to do that because the government can make up to 6 months of payments for you to be able to do that. They've also upped the limits on some of their loan programs. Their express loan program typically caps out at $350,000, and they've gone up to $1 million to help, drive small business lending at at banks, specifically community banks and some of the grassroots banks where they see small business owners not being able to access capital. So they're really encouraging small business lending through these incentives in this program. Another enhancement that was done was the removal of that EIDL advance from your forgiveness on the PPP loan. So that was another nice change that we were really lobbying hard for, because most people that took that EIDL advance didn't realize at the time that they took it that they would then have that deducted from their forgiveness on their PPP loan. So they have reversed that. If you are a business owner that's already applied for forgiveness and they deducted that money from your forgiveness, you will get a refund check from the government to reimburse you for that. So some really good benefits there. They've also added some more funding to that EIDL program because it had also run out of money. So they're really just kind of going back, refunding all these SBA programs and giving some nice enhancements to hopefully encourage small business owners to get back to business, try to grow their business, and be able to have access to the capital that they need to be able to do that in 2021. That's pretty much a quick synopsis of everything. I know we'll probably have some more questions, so feel free to ask some more specific questions on these programs in the question and answer time.
Yeah, a couple of other things I thought I'd mention. Lane has more or less mentioned everything we know to date, but just a couple of other items. She mentioned the eligibility of the 25% reduction in revenue year over any given quarter in 2020 versus 2019. Those entities, I'm just going to highlight some bullet points that I'm looking here on my cheat sheet just to give you an idea of what the guidelines may look like once they're finalized. Any entity not in operation on or before February 15th of 2020 is not eligible for this PPP2. I've had a couple of questions about current businesses that are launching new businesses after, February 15th. Those would not be eligible. Loan amounts like before are 2.5 times average monthly payroll costs, unless you are a hotel or restaurant. And in that case, it can go up to 3.5 times of average monthly payroll cost. Some eligible expenses, just like before, they include group insurance benefits, mortgage interest and lease payments, utility costs. They can now include software, cloud computing, HR and accounting needs, and any property damage due to public disturbances. The coverage period remains the same, either 8 or 24 weeks. And then that's it. My cheat sheet has a couple other things that Lane had already mentioned regarding SBA 7A loans. So that's a quick snapshot of both PPP and SBA. I know there are going to be a lot of questions in Q&A. And also, we talked about this before everybody got on the call. We can't cover everything that has sort of transpired to date or will come in the coming weeks. So our plan is to, if you have additional questions that aren't covered today, send them to us and we'll try to answer them, or we'll answer them. And we hope to have, or will have, I need to learn how to be more definitive in 2021. We will have a follow-up call in the next week or so as details, as we receive additional details and guidelines are formalized. So with that, I think it's appropriate to turn it over to Sasan from Fraser Dieter.
Thanks, Kevin. Appreciate it very much. Great job, Kevin and Lane. I'm sure I'll be calling you guys a lot as well over the next coming weeks. So
I'll send you Lane's number.
Yes. I've learned that. I've learned that's the way to go.
Thank you.
Thanks again, everybody, for taking the time with us today. As mentioned earlier, I'm a tax partner at Fraser and Dieter and the office managing partner. And the last month has been interesting. The last few weeks. I mean, I think when we originally planned this, the topics and the conversation was going to be different. And I believe just before Christmas, we got surprised with a bill, and then it drug out for a week or so, and eventually got signed. And so it was a little bit of a Christmas present for everyone in the banking and accounting community. So we're still learning. I think, as you probably saw today, I mean, some information just came out 24 hours or so ago. But from a tax perspective, what we had originally intended to talk about was PPP forgiveness and how that all looked. And originally with the CARES Act, it appeared the Congress intended to not have this be a taxable issue, but then the IRS had twice over the course of the year, it said, no, we got a problem with that. And then luckily in this bill that just passed, that they fixed that. And so now when you guys are applying for forgiveness, there won't be a loss of tax deductions. What IRS was wanting was to say that that if you got forgiven, that's fine. That you don't have to pick that in income, but you can't have the deductions that cash paid for, right? And so that was the big argument between the IRS and Congress, and they fixed that. So that's welcome news for all of our clients and all of you. And so I'm sure most of you have already picked up on that, but just want to make sure if you hadn't that you are aware of that. And then also from the tax perspective regarding PPP and the round 2 of the loans, I think Lane and Kevin covered most of it very well. And we're working with our clients to help navigate some of the nuances as well in the calculations of the revenue and things like that are still, like, guidance was just coming out yesterday. We've got people with unique situations where maybe they weren't in business of all of 2019 and things like that. So do understand if you've got unique situations that there are some outs in the guidance that's come out. And I'm sure there'll probably be some changes too over the coming weeks. But please do ask questions. We're here to help you navigate this process or speaking with your advisors. But also wanted to cover another portion of the bill that you haven't seen talk about as much right now because PPP is such a big topic. But I did want to bring it to everyone's attention because I do think it's going to impact a lot of our clients and maybe some of you on this call, and that's the employee retention credits. If you haven't heard about this yet, you may have already. These aren't new. These came out with the CARES Act last year, and what happened is that Congress said you could do the PPP, but you couldn't do both the PPP and these employee retention credits. And for companies with less than 100 employees or companies who didn't qualify for PPP, they very well may be taking advantage of the employee retention credits already. But many people got PPP and just never looked at this, right? Well, what happened was last week or week before when they signed this into law, they retroactively changed the rules and said, hey, you can actually now do PPP first draw and employee retention credit. So that's a retrospective deal here that people have got to figure out how to implement. The caveat there is an employee retention credit is just that. It's a credit based on payroll taxes based on qualified wages for an employee, and there's a lot that goes into that concept. But long story short, if you got a PPP loan and you had more qualified wages than PPP covered for you, you could potentially have some employee retention credits to offset some payroll tax obligations now, right? And there's some refundable aspects of this program. And in addition, they extended the program. So now people who are getting PPP second draw or not can also take advantage of the employee retention credits in 2021 for the first 2 quarters of 2021. And the thresholds to qualify are much more forgiving or easier hurdles to hit than the original employee retention credit rules for 2020. So you've got 2 sets of rules to qualify for employee retention credits. 2020 rules are different than 2021. They made 2021 much more lax. The rules for 21 to qualify are that if you have 80% or less of the revenue from the same quarter in 2019, then you would potentially qualify for employee retention credits. And that very well may be a bar easily hit by many, because I know we're still working through this pandemic, and all of our businesses aren't where where we expected them to be 12 months ago, and people are in different situations. And so these credits that are becoming available can offset payroll taxes. They can be refundable, and the guidance on how to implement this process is not out. this was all just last week. So Treasury and the IRS will be publishing some guidance on the mechanics of how to navigate the retroactive aspects of the bill that were just passed. And then also to help navigate the 2021, which should be a little bit easier. I think the 2020 retrospective is going to be a bit of an issue for people that do qualify and did get PPP. I think there's going to be some complicated math, but the numbers could be material to you and your company as far as the potential tax credit available to you. And I think we covered at a high level, just to cover some of the differences between 2020 and 2021. For 2020, there was two ways you could qualify. You'd have to have a partial or full shutdown of business operations due to a government order. So, I think many businesses in retail and restaurants and things like that would definitely just qualify off the bat for reduced capacity requirements based on government mandates. Or the second way to qualify is if you saw a 50% drop in revenue in any quarter compared to prior year. So those are two ways to qualify for the 2020 credit. And so that 50% hurdle may be tough to hit for some, but that government shutdown may also be an opportunity to qualify. But for 21, again, the difference is you only have to have a 20% drop in revenue quarter Q1 or Q2 21 compared to 19. Apologize, working from home if you hear my dog barking in the background. And then one other caveat was that for Q1 of 2019, they also allowed you to look at Q4. I'm sorry. For Q1 2021, they also let you look at Q4 2020 instead to test and see if Q4 2020 is 80% or 20% less than 2019 and go ahead and qualify for 21. So they put an extra benefit in here for businesses in Q1 of 21 to potentially qualify right away for these retention credits. So I know that was a lot to take in and it's a bit confusing, but I think the long story short of it is if you had partial or full shutdowns or saw significant declines in revenue, and may see some decline in revenue in 21 compared to even 19, then this is something that you need to explore for your business. I think with that, I'm not sure where we are on time, but if I would imagine, knowing I'm pretty long-winded, we're probably getting pretty close.
Yeah, Mose, I see a number of questions in the chat. We can proceed that way, or we can open it up. I'll defer to you guys.
Yeah, so I'll just jump in here. I mean, we'll just go through some of the Q&A, and so everybody just pump your questions into the chat, and we will work our way through them for the next about 20 minutes or so before the breakouts at 9:45. So first of all, thank you, Sasan and Lane and Kevin. Appreciate all of that. So let me just scroll back up through. There's a lot of questions coming in here. All right. So we'll just start with this one. If you've already gotten forgiveness on the first draw PPP, with the exception of the 10K from the EIDL, will they now go back and give the 10K that was originally excluded? And obviously, go ahead, Lane.
I think Lane had mentioned that, so I'll give it a go at my own risk. But it's my understanding that if it was excluded from forgiveness amount, the SBA will remit a $10,000 check back to the borrower.
All right. I don't remember anybody mentioning this in the three different discussions, but are there any updates to the Main Street programs through the legislation? Not sure who best to direct that one to.
Yeah, I was going to say that program did expire on December 31st. We did not do many of them here at Pinnacle. We honestly didn't have a lot of interest in it. But I did not, see anything in that lovely 5,000 page bill. But there might be something that'll come out later on that. But I don't think the program was very widely used. I don't think a lot of people qualified or wanted the fees that went along with it. Kevin, I don't know if you have any more insight.
Yeah, very little. I think, I think we may have done 3 loans literally within this entire bank. And yeah. I think in general, I saw something that, I don't know, maybe $50 to $100 million was put out throughout the entire program, which is very, very complicated. And so long answer to your question, but it's not available. That's the update. It's no longer available.
Okay. A couple of folks have asked this question when you were talking about quarter over quarter comparisons for the PPP2. Is it choose any 3 months or is it calendar quarters? And also, is it matter whether your business is accrual versus cash?
Lane?
I was going to say, I don't think it matters if it's accrual versus cash. Sasan may be better to answer that, but I would think you have to do the same. So if you use cash-based accounting for 2019, you can't then switch for 2020 and compare a quarter using that cash-based accounting. And they do want it to be the same quarter. And they did specifically say like calendar year quarters. So if you used first quarter 2019, you'd want to compare that to first quarter 2020. So you definitely need to use the same quarter. And then they also noted that if you received PPP money in that first round, you can exclude that from your revenue. So let's say you used third quarter 2019 to compare to third quarter 2020, and that's the quarter in which you received your PPP money, you would back out that PPP money from your revenue in order to compare those two quarters. So I'll let Sasan elaborate on that as well.
Yeah, I was actually reading, let's see, the SBA guidance that came out was 100 and something pages, and I was reading some of it last night. And I did see, I did look at the gross revenue and how they calculate that. And I do remember seeing that there was reference in there to your internal method of accounting to how to determine gross receipts. And so while I'm just recalling something I read not long ago, that's not a fully baked thought, but I do believe in the internal accounting method used by your company is the one that that you would use to determine those quarterly gross receipts thresholds for your qualification.
Wait, one other point I forgot to mention when I was going through that quick list of eligibility, you have to use the full amount of the first PPP loan before you apply for the second. So if you've got some money that's still remaining from the first PPP loan, which, you know, I've seen cases with seasonal employees, especially, they just haven't used all the PPP loan. You got to use it all before you apply for round two.
Hey, Kevin, I got a question that we hadn't actually talked about. So, you know, what was happening before this bill was passed is most in the CPA community were advising clients to just kind of hold off on the PPP forgiveness application process. And I think banks were too, right? There was a lot of uncertainty. And then, you know, the IRS came out in November and said, hey, we don't care when you apply for forgiveness. We're going to treat this as a 2020 tax issue, right? Before the bill passed. And so then the CPA community was like, okay, well, I guess that plan may not work, right? But this bill ultimately changed that. So when you say you have to have used the funds, is there a way, if we haven't applied for forgiveness for the first PPP, is that going to be a problem? Because I think there's a lot of people in that boat who haven't completed their applications.
I'll defer to Lane as usual, but no, if you haven't applied for forgiveness, that shouldn't affect your ability to apply for PPP2. But Lane, I mean, you do have to use all the money. So how would one prove that?
So that is, you know, they haven't necessarily, Sasan addressed all of that, but, you know, with that first round, you were supposed to have used the money by the end of December. So that's kind of when that window ran out for you to be able to use the money. Basically, you'd need to go back through your accounting records. I think when people say they necessarily haven't used all the funds, I think in a lot of cases, that's business owners not allocating some of their expenses that they actually had that were eligible under PPP to those PPP dollars. And so what I mean there is they may not have used it all on payroll, but they may have had some rent expense. They may have had insurance expenses. They may have had other expenses that they can apply towards those PPP funds so that they can show they did use all the money. Now, if they truly did not have the expenses and did not use all the money, that is a weird window that I don't think we exactly have the full answer on if they even would be eligible for the next round, because they still have a balance of money that they haven't used from their their first loan. And I would question why they didn't have those expenses. They didn't have that payroll. I mean, if they were still keeping people on their payroll records, based off of how the calculation worked in the first round of getting, 2.5 times your payroll expenses, if they still kept those people employed or kept some employees paid, and they got that money, in June or July and had to the end of 2020 to use it, they should have been able to use it all up on payroll in some way, shape, or form. So they do need to show that they have used all that money to be eligible for the next round. There may be some unique caveats for seasonal type businesses, like Kevin said, where they just couldn't use it all because they're seasonal and they only have employees like in the first and second quarter of the year, and then they don't in the second. Those are some, weird case by case basis that we'll probably have to go directly to SBA to ask how to handle. But for most business owners, if they truly use the money on payroll and kept people employed like the program was looking for, you should have had no problem using all that money by the end of the year.
Thanks. Got a question from Klaus asking about how to apply for the employee retention tax credit retroactively.
Yeah, well, that guidance isn't out yet, so to stay tuned. The IRS and Treasury got some work to do to tell us how to follow the whims of Congress and go back and change what they told us the first time. So we expect that to be in the next week or so, hopefully. But we're watching and monitoring it. But I'm hoping the next week we'll know.
All right. And I'm going to go ahead and say, Rosemary, you might want to be ready to come off of mute because I'm not sure I understand your question. But the coverage period for the first draw PPP, can a business do 10 or 12 weeks so long as we maintain the full-time employee levels during that period? Does that make sense to our panel?
Can it be for a time period between 8 and 24?
As far as when you use the money or how you calculate?
In the calculations.
In the calculations, I don't think there's a lot of deviation in that calculation, I believe, but I do think there's some flexibility in how you can use it. But I'd have to really dig into the bill a little bit more to make sure, see how they exactly clarified that. Sasan, I don't know if you got that deep into the calculation component yet.
And here's why I'm asking. We calculate, when we applied, we did it on the 10 weeks, like they said, for all of the eligible expenses. If we do it for 10 weeks as opposed to 8, it'll all be salary. Clean, easy peasy. But if it has to be 8 weeks or 24 weeks, then we'll choose the 8 weeks and we'll keep the other expenses in there.
Gotcha. Yeah, I mean, I think you can always accept a lower amount than what you're approved for. It's not like if we say you're approved for a $2 million PPP loan, you have to take the $2 million. So if you're wanting to kind of take the lesser of the two to make sure you don't run into the caveat of you not being able to spend all of it, I would just say, lean on the conservative side of taking the lesser amount of the two calculations.
So just to make sure I understand. So in 24, so the loan is more than you use, is that correct?
We can make it fit in the 8 weeks just fine. Even though they asked for 10 weeks, we can make it fit, but it includes things other than payroll. If we use just payroll, we use it all up in 10 weeks.
Yeah, well, I think, when we were talking about those retention credits, I don't know if any of those will apply to you, but there are rules in there. If they did apply to you, the rules say, you can't use wages that are forgiven by PPP and get a retention credit on it if your business may qualify. If your business doesn't qualify, it doesn't matter. But getting those other expenses forgiven and not wages would then potentially give you more credit, right? If you did qualify. So that's that math that I was saying is going to be weird. And people don't really understand how that's going to work when somebody got PPP and qualified for retention credits. It's going to be a little bit of a mess. But I think that's why Congress originally didn't say you could do both, because they saw it was probably going to be a train wreck. And then they changed their mind and said, okay, well, let's go for it. So, so that's one little caveat, I think.
Thank you.
Yep.
All right. A question from Luke here. If I go to the SBA loan next month, what is needed to qualify for the government to pay up to $9,000 to September 2021?
That is kind of a loaded question from Luke. So that gets it to the eligibility of the whole SBA program. So, SBA can finance certain things. They can finance, you buying a business, you buying out a business partner, buying a building, buying equipment, buying inventory. We just did a loan here at Pinnacle for somebody that's actually, once you get back up and going, you may have depleted or all your inventory went stale. So now you've got to ramp back up to get your business online again. Those types of things are things that are all eligible under the SBA loan program that would qualify for getting up to $9,000 a month in payment. So it just has to be something that's an eligible SBA expense. But that is, quite a long document with the SBA of what actually falls under eligibility. So Luke, if you have any specific questions, you're welcome to email or call me offline.
I've got a question along those lines, if I may. The SBA enhancements are so good. What precludes me, or can I refinance bank debt using SBA? I know the answer is a big maybe and a complicated. So, and we talked about this earlier, Aaron. Thank you for the question earlier. But briefly, what prevents that? Under what circumstances can you do that?
You had to do that to me, didn't you, Kevin?
I
SBA,
did.
yeah, refinances with SBA are difficult, mainly because the SBA program exists to do funding when somebody cannot qualify for a loan on conventional terms. So if you already have a loan on conventional terms, it's hard to prove to the SBA as to why that debt needs to be shifted to them, because you obviously got a loan before without needing SBA. So there has to be something about that loan that's on unagreeable terms in order for it to qualify for refinance under the SBA programs. The biggest thing that helps you qualify would be a balloon note type structure, which a lot of conventional debt, most banks don't do long-term fixed term financing. There's usually some sort of balloon. So it may be a 10-year term, but it balloons in 5 years. That would qualify under the SBA guidelines for an SBA refinance. Now, another caveat to that is, though, in order to do that, we do have to show that we're improving your overall cash flow by 10% when we do the refinance. So if you're way into a loan and you've paid a lot down in principal, it may not qualify even with taking it and refinancing it, unless we can show we're putting you on better terms and able to give that 10% improvement to your cash flow. So there are times when we can refinance, but it is much harder to do, and we have to prove to SBA that there's some reason for us to do it. And we must always take the same collateral and same guarantors. So if you're wanting to refinance a piece of debt because, say, you have a partner that wanted to get off that loan, you wouldn't be able to do that and use SBA, because all the same people that guaranteed that original note have to guarantee on the SBA loan. Say you pledged your home as an asset towards a business loan and you want to get that collateral released, SBA wouldn't be able to release it with a refinance of that debt. They have to take exactly the same collateral that's on the first loan that they're looking to refinance, and they may even require additional collateral when you meet all the SBA guidelines. So a couple of different caveats there. Not to say that debt refinance isn't a good option. If you have a balloon note that's going to balloon in 2021 or 2022, it may be a good time to potentially look at SBA to refinance that debt. But remember, we do also have to show that we're improving the cash flow by refinancing it as well. And SBA rates are typically higher than conventional rates, because the banks actually have to pay an annual servicing fee to SBA to keep that loan on the books. So they build that spread into your rate. So conventional rates are always going to be a little bit lower than the SBA rates.
Thank you. Thank you very much. Question from Ryan. Do I have to go through the bank that funded my original PPP loan for the forgiveness application?
Yes.
Yes, that does. I get that question a lot because there still seems to be confusion of where that money came from. So when you got your PPP loan, if you got it at Pinnacle Bank, if you got it at Regions Bank, that bank is the one giving you the money. When they forgive it, that's when the government comes in and they forgive that bank. So if you go to a different bank or you go somewhere else for forgiveness, they can't forgive a debt that's not theirs to forgive. So you do have to go back to the bank in which you applied for, because that PPP loan you have right now is actually capital that's provided by that particular bank, not by the government. The government doesn't give their capital until it's actually forgiven.
And Ryan, you asked a question earlier about going through the same bank for the application for PPP2, and sounds like you're looking for a new bank, so I will be in touch. But anyway, seriously, you don't. But client relationships, unless you have a client relationship, speaking for Pinnacle only, my guess is they will not accept the application. So if there's need there.
Okay, thank you. Thank you for that. I just had problems with Union Bank in California. Just been very unresponsive. So with the forgiveness. So I'm wondering if they're ever going to respond. So just wanted to see if there's any avenues. Thank you.
Ryan, if you do have problems, you can always, if you applied with a bank in California, you need to reach out to the SBA office there in California. But the SBA district offices there are very, very responsive. So if you're having problems and not getting a response from the bank, I would definitely appeal to the district office with the SBA directly, and they can contact that bank to make sure they're taking care of your needs on your loan.
Oh, awesome. Thank you for that.
Excellent tip right there. Thank you. All right, we've got a couple more minutes for questions. So here's one more. Do you have any guidance for business owners to be able to make or take additional PPP to pay themselves in the case of an LLC versus an S Corp? So question about LLCs versus S Corps.
Yeah, I mean, the rules on the compensation that you can run through a PPP for owners is pretty well baked now. It was a bit confusing at last March, but I, off the top of my head, I don't really have anything to add. There's the rules are out there. It is what it is as far as the entity types and who qualifies. I mean, I haven't seen anybody having to make any entity changes or anything like that to qualify versus not qualify. The rules for single members, like sole proprietorships, were quite different than most other businesses. So I think that was also a bit of a confusion point for a while of how to do those calculations and things like that. But again, I think by, April, May, June last year, it was kind of all sorted out.
Sorry, I was the one that asked the question. Could you explain what how to do the calculations
Of the owner's compensation?
Yes, please.
Yeah, I mean, I think in the guidance, I don't know it off the top of my head, but the numbers, but I'm pretty sure it says the maximum amount of payroll officer or owner payroll or owner compensation eligible to be included in the PPP is, a number times, X number of months, right? It's locked in, right? There's no variability to it. Now, also, I think it's also limited to based on what it was previously, right? Or like you can't just say, oh, I'm just going to take the max. It's got to be based on some historical data, I believe, too, when you're calculating the PPP loan size. I mean, an owner can pay themselves whatever they want, but as far as like what's going to be forgiven, it's capped. They're not going to let you just comp out yourself for whatever. There's a limit.
Great. Thanks, Hassan. All right, well, we need to wrap up the Q&A so that we can go to the connectivity part. I would like to encourage everybody, because in about 45 minutes, you're going to go Oh, I wish I would have asked that question. Jot this down. You're going to email Marla at eonashville.com. Pretty easy to remember. And she will work to get answers to any other questions that you guys have related to PPP and the tax credits that we've discussed here today. And thank you to all of our panel members. Marty, I'm going to go ahead and tee you up to basically give us a quick introduction to the little breakout sessions that we're going to go into, along with, I believe we have 2 questions for everybody to kind of participate with.
Awesome. Thanks, Mose. Thank you for our panelists. Great job as always. It's so great to have you guys as a resource for the chapter, and everybody, you know, these guys are available. So reach out to them, you know, lean on their expertise. They're part of the chapter. And so, you know, one of the things that we're trying to do to change the perspective on some of these online events is, I had a really insightful conversation with somebody that said, I'm not coming to any more virtual garbage. And I said, okay, well, let's talk about that. And where we got to was, you know, one is the opportunity to focus, which that's difficult to do. But secondly is, it's the 10 minutes before, it's the 15 minutes after that you get into the small groups, just chatting, you know, offline with somebody and kind of saying, you know, this is what's going on. This is what I heard in that conversation. This is, you know, now it makes me think about this. And so we get this extra piece. And so the idea here is that all these EO exchange events are going to end with that type of connectivity. So Samir's going to break us out 2 kind of seed questions, and somebody needs to kind of take the ball and be kind of quote unquote moderator for the group. But you know, two seed questions. What do you think about what we heard? And then what else do we need to learn? Of course, we can then follow up with the SAPs, but just kind of start that conversation. What do you think about what we heard? You know, what's your business going to do with this information? And then what else do we need to learn? And then you know, it's the casual conversation. So love everybody's feedback as we kind of close out here and jump into these small groups. And thanks again to the panel, Lane, Kevin, Sasan.
Thank you all.
Always amazing.
My pleasure, guys and girls, and thank you for your time and more importantly, your partnership. I was just sending an email out with my contact information, which hopefully most of you have. If not, I'm easy to reach. But if you have any questions in addition to what you've already submitted or will submit, let us know. Happy to help you guys, and wish all of you a great 2021. Thank you.
Great. And with that, I think Samira or Marla is going to break us out. And
See y'all later.